Yes, sir. We are live.
What's up, family?
What's up, y'all?
Y'all, look
Live,
who's Super Bowl
live.
ready, though.
You
Look
feel
who's
me?
Super Bowl ready.
Listen, I got my outfit hung up, ready to go. Irons, not a wrinkle in sight. I got this fly jersey hoodie that's finna get worn. You feel
Oh
me?
my goodness. You got a special hat for the game? You got a special hat just for this game?
I ain't got a special hat for the game,
Okay.
but I do got the custom Nipsey one of one with the hustle on the back,
We
hoodie with
wearing the
the
blue face. I know we got the blue face
come
on.
on, I got the blue face. You feel me? Might have to get it clean, shined up. You know what I'm saying? I got the blue and yellow maxes. Like I'm ready.
Boy, don't tell me you got some Ram socks. I'm gonna be too through.
I don't got ram socks. I felt like that was corny. I seen them in the shop. I'm like, man, if I do that,
It's
that's
too
like
much.
one step too far. Like the Rams ain't never cut me a check. I can't wear no socks, no drawers, no.
Right? Okay. All right. You
You
good
feel
then.
me?
You good then. Okay. I
But
just had to
yeah,
know
though.
you being Super Bowl ready. Okay.
Yeah, you know what it is. Speaking of which, we're not gonna have supplemental Sundays next week. We're gonna take that week off. Um, we've been getting a lot of cancellations. I'm not gonna front with y'all. So it's partly Super Bowl, but it's partly the fact that I'm trying to get the cousins together so that we can keep getting new material because I don't want to have to present to y'all every week because I don't know everything. It's a lot of cousins with a wealth of knowledge that I'm trying to pull into one in a structured unit with a structured playlist to get structured information. You feel me? But it's not always easy. You know what I'm saying? But we gonna get it together. We do got some things lined up. We got some other option strategies. We got some tax information, some insurance information, some budget information. We got a lot of things lined up. Maybe even a value investor might pop up and give us some valuation formulas. That's gonna take some mouthpiece work, but I was born with one. You know what I'm saying? So that's nothing to me. I'm gonna get that done for y'all. But this week though, had to put something together, not super formal, but it's knowledge in there. So we're gonna go over a little bit about trading psychology, and we're gonna go over like how to read options chains, how to pull up an options chart, how to find a good price, how to know what's a good price. I've done some of this material before, but it's been a lot of new cousins, and I be forgetting how long me and AJ been doing this. Like it's been
Listen.
a minute. Like since what, like November, October 2020?
Yeah.
Yeah,
Sure.
it's been a little minute. So some of the material that we did together way back then, some people missed out on it. So we gonna revive some of that, maybe brush up some of y'all that, kind of got lost in the weeklies, you know what I'm saying? We gonna we gonna get y'all right. So first we gonna start off. I do have this document. Um, let me see. Make sure. Let me turn this baby face ray off. My fault, y'all. All right. I'm gonna go to share. I'll be feeling so old when I use Zoom, man.
You be boy, to share the screen button, that is real green down there.
Yeah, right. All right. Am I cool?
You cool. See you.
I'm cool. I'm cool. You could read it and all. Do I need a Zoom or it's good?
I mean, I can see, but let's zoom in for the people though. Let's zoom in just a little bit for the people.
I shouldn't have even asked. Hold up, the Zoom right here. All right,
There we go.
boom,
We rocking.
boom. We good. So, all right, y'all. So this was a blog that was published back in like 2011. It's a trader that has been trading for a very long time. He had been trading for 15 years as of 2011. He does have a Twitter account. That's his Twitter account if you want to follow him. but he put out like a blog, just of almost like just mental notes of thoughts that he's had or that he's compiled through his trading career. Now, this is something that I took a lot from. It was a lot longer than the ones that I have here, but I didn't want to make it super, super long. So y'all just hearing me read. But if you want the link, I can definitely give you the link. You can read the whole thing. Some of the things are a lot more relevant to short-term trading. So, I definitely took those out because I know cousins, we don't need those. You feel me? We focus on something else. You know what I'm saying? Let me make sure y'all can see it though. Can y'all see it? If you got an iPhone SE, I do not want your opinion right now. I need like the people that got the big screens. If
Not
you
you
on like
said iPhone 13 and up.
if you can't see it on the SE, that's not a me problem. I just want to make sure real quick. I'm looking at the chat. I'm not gonna start till y'all say y'all can. Put your glasses on. I don't know how to make it bigger than this. Keep it 100.
Oh, they saying they can't see?
Zoom in so we can read it.
Ah. Okay, you might have to do the custom zoom. Maybe hit them with like the. Okay.
Listen, that's about good as it's gonna get because now I'm gonna have to be scrolling all over.
I was just about to say you're going to scroll a little bit.
All right, boom. So we're just gonna start off. I'm gonna read a lot of these just because it's good information. You feel me? And y'all don't have nothing better to do on a Sunday night, or you wouldn't be here right now. So never underestimate the power of a momentum move up or down. Once the freight train is in motion, it will keep going much further than most have anticipated. An example of this would be Square, would be PayPal. You feel me? Would be anything fintech related lately, where you think you catching something, and that train just keep moving, keep moving, keep moving, keep moving. So that's a good example of that right there. And if you got to take notes, take screenshots, this is on YouTube, so you can always go back to it. So I'm not gonna slow down, but you feel me? It's gonna be there for you. Adding to a losing position is one of the best ways to end your trading career. We've had many examples of that, whether it be ARC. There's always gonna be positions that you think you should average down that are not good to average down. So one thing I do want y'all to do before we get too into it, I need y'all to put in the chat. We doing that. We own that tonight. Type in the chat how much you are willing to lose on one trade. How much money maximum are you willing to lose on one trade? Because I need everybody to have that number in mind with whatever trade they take, because that has to be your absolute maximum cutoff point. I don't care about no support resistance. I don't care about no fundamentals. I don't care about no catalyst coming up. You need to have a dollar amount in mind that you are not willing to lose more than that in one trade. You feel me? So make sure y'all type that in the chat. I'm talking about a dollar amount. I'm not talking about a percentage, because then percentages be messing y'all head up, because a lot of times y'all don't be cutting it when it gets to that percentage. And that percentage don't mean nothing at the end of the day when you go to withdraw some of that money from your account. You're not withdrawing no percentage. You withdrawing a dollar amount. So I'm talking about blowing your account, because there are people, majority of people that play options blow their account at some point. That's a dollar amount. That's negative 99%. You feel me? So you need to have a dollar amount in your head to say, I'm not willing to risk more than this maximum on any one trade. If it get to this, I'm out. Gotta have that in your mind. I'm telling you, it's way better to be safe than sorry. All right, so we're gonna get back to it. The best winning trades normally have big volume driving them higher. We've seen that before. That means the demand is getting high. People are running into the stock. It's gonna push the trend. you know, the way that the volume is going. So if it's selling off with that volume, it's going to keep going down. If it's getting bought with that volume, it's going to keep going up. Now, sometimes you have earnings and stuff like that that could make it a little bit tricky, where it has one day of a hard sell off or one day of a hard buy because of the earnings. So just be mindful of stuff like that. The best traders are incredibly nimble. They can be bearish, but still capable to taking longs without hesitation. Perma bears and perma bulls eventually get washed out of the market. You have to respect a strong bull market, and you have to respect a mean bear market. So I don't want to hear none of y'all claiming that you a bull, you a bear. Like if you doing a game, cool. You doing a bull versus bear, you declare yourself. But in this game, you don't make money being no bull or bear. You make money being able to play both sides. Because let's believe the market makers is playing both sides. Let's believe you can make money playing both sides. So you got to learn how to play both sides in order to be successful at trading. Now, you can make a lot of money being a bull for a very long time because the stock market is naturally going to go up. We've seen that. You can make a lot of money being bearish because there are going to be pockets with strong volatility where you're going to catch a bag being a bear. But don't psych yourself in defining yourself like you got to take a side, or you on Twitter, you know, trying to go back and forth with bulls and other bears. That's not, it's you psyching yourself out. And I'm telling you, you setting yourself up for failure by even defining yourself as that. Now, more trades does not equal more profits. Less is more. I ain't gonna read it again, but say it to yourself, please, because this is how I hurt myself last year.
Overtrading.
Overtrading. 2020, I didn't take that many trades. I took more than I usually take, but I didn't take that many, and I had a very good year. And it wasn't just all, you know, I have to give it to the 2020, right? It was nice. But I didn't take that many trades to where it was just like that was the reason that I was profitable. Last year, I way overtraded. Way overtraded. When I looked at my history, I was like, who is this guy? You feel me? Like it looks crazy. But anytime you trade more than you're prepared for, you setting yourself up to have more losses, because the stock market is not here for you to win. It's here for you to lose. They're here to take your money. So the more opportunities that you give them to take your money, they're going to take your money, period. You're not that nice. It's going to happen. So you don't want to have that door keep swinging open for you to be able to lose more money. Take your wins, regroup, and then execute again. Don't just keep don't be saying no house money, oh, that's house money, oh, because eventually you're gonna run out of house money and your account gonna look like it did 18 months ago, and you're gonna be looking like, dang, how do I get that back? Because it wasn't really house money. That's money that you earned. Cherish it. You know, live with it for a little bit. Take some out sometimes to make it real, so it's not like a simulation game that you play.
Because it's really how much you save is what matters, right? It's how much you save, because we're building wealth. And to that point, because I was in the same boat over trading, right? And for me, it was every time I take a trade, understanding what my why is, right? Understanding what the purpose is that I'm building wealth for, right? So I'm like, dang, like I got my people on my back. I can't just be taking, trades like this a trade that I could, I would take with my people on my back and bring them along with me, or no. And that kind of really helped me psychologically. So just something to help people with.
Fact. Every trade that you take and lose, you taking food out your people's mouth, your kids' mouth. Yo, that could have been rent money. Like, this ain't no house money. You could do a lot of stuff with that money.
Your money, right?
You feel me? All right, cool. So the best traders I know keep their routine very simple. That's easy. Never confuse your macro views with what is actually happening in the stock market. So to go right into the next one, the economy could be in recession, but if the market is rallying, you need to listen to the market. It pays better. That is a perfect example of last year. Last year, after coming out of 2020, we was talking about rates. We was talking about all the economy is going to be bad. The housing market's going to crash. We're going to be in a recession. The SPY just kept hitting new highs, new highs, new highs, new highs. Every other week, it was hitting new highs. And people that was trying to anticipate, the economy being in a recession, inflation being high, rates coming, they missed out on all that S&P money that was just on the table. You feel me? So sometimes you have to put some of your views to the side and really pay attention to what the market is doing. Because if the market is saying that you wrong, you wrong. Period. You could have all these data points in the world and you may be anticipating something, but in the current moment in time, the market is saying something else. You might need to adapt to the market. Now, that doesn't mean go playing short term or go doing this and that, but you don't want to buck the trend. So it's one thing to anticipate and set yourself up for if this happens, this is how I'm set up for it, while also being able to look at the current state of the market and being able to adapt to what's actually going on and not just what's going on in your head. Mm-hmm. All right. So right into the next one. Fighting the trend doesn't pay well. In general, trading with the trend pays off much better. Self-explanatory. Get very defensive when you make 2 to 3 bad trades. Often traders will do the opposite, self-destructive behavior. So this is a key one that I like, because when you take some L's, and this happens, especially in a choppy market like this, you could take 2, 3, 4, 5 L's in a row. You could feel like you don't even know how to trade no more. All you need to do is to slow down, get more conservative, and get small wins, whether that be 10% win, 20% win, one contract worth of a win. Like, just slow down and get small wins, because now you got to build your confidence back up. Because I've had that happen to me before. I take about 3 L's in a row and I'm like, dang, man, like, I don't even want to, I'm finna just buy shares. I don't even want to do this no more. I don't know what I'm doing. I tried to put my money out there, whoop-de-whoop. It happens to everybody. That's what the market is supposed to make you feel like. You feel me? But as you get those small 10%, 20%, those baby wins, it builds your confidence back up. So now you realize, okay, that was just a little cycle that I was in. I could still do this. And then as you get your wins up, you get your confidence up, you get your strategy back up, you can start applying more pressure to the market and, get your mojo back. But it's all mental. It's all mental. Never be too cocky. Like, everything about the market. You could just pull out 50,000 if you want to, and never, feel like you can't do nothing, because I know if you're watching this video, you are part of a community that's going to help you out. You feel me? We all got strengths and weaknesses that if we pull together, we gonna help you out with whatever you need help with or you struggling with. So that's that. Trading on margin is the surest way to emotional decision making and eventually will wash you out of the business. That's a fact. Do not trade on margin.
Yeah, just don't do it.
Do not trade on margin unless you know it absolutely what you're doing, which you're not going to be listening to me saying this anyway. But please do not trade on margin. It's you get in front of, you basically get in front of options that you do not need to get in front of, because options are such a highly volatile, news could come out overnight, your option go to zero, you get margin called. Now you got a problem, a real problem. You didn't just lose the money that you had, you lose money to somebody who's going to get their money back. E-Trade, TD Ameritrade, they like the mafia. They're getting their money.
Right.
You feel me? Whether they got to garnish your checks, whatever, like they coming for it.
Right.
Now, Never underestimate the confidence of building power of a tiny gain that is booked. Green on the screen helps build confidence for future trades. We just talked about that. Big winning streaks start with tiny wins. We talked about that. It's okay to be wrong, but it's never okay to stay wrong. We did touch on that. You know, if you wrong, you wrong. Don't keep trying to buck the trend like, no, I'm right, I'm right, I'm right. And you keep pouring money into positions that are losers. Like it just, we gonna get into that, into catching falling knives. We gonna get into that. So good fundamental analysis and proper technical training is a killer combination. Mm-hmm. Now, I do want to touch on this because I put that question out there on the Come Up series. What else do y'all want to learn on Supplemental Sundays? And 90% of it was technical based. Mm-hmm. Now, we gave y'all MJ gave y'all a super in-depth video of how to do technicals, multiple different ways to do it, how to build on it, how to practice it. I'm telling y'all, if y'all watch that video and master that video and you're doing leaps, you have everything that you need to know about technicals to be able to be a successful leap trader. I'm telling you, it's not more complicated than everything that he gave in there. Now, if you're short-term trading, you want to learn other stuff, that's cool, but that's a whole different ballgame. The come up is going to be scarce for that because we teaching building wealth. We're not teaching getting income or getting a bag right now. We teaching building something that's going to take, you know, half a year, 1 year, 2 years to build up over time. And with that, you need technicals and you need fundamentals. You need the both combo to mesh together to be able to spot the opportunity. So I'm telling y'all, I know it's fun, it's cool, it's nice when you can show other people your technicals and how it worked out, but it's way more to the game than that. And half of that game is just practice, just experience, just repetition. It's like shooting in the gym. You got to learn how to really, you know, not hit the rim at all. And I'm not talking about air balls. Like when I used to hoop, my coach was like, if you not swishing, you don't really know how to shoot. You getting lucky. Mm-hmm. So until you know how to swish it, you don't need to be practicing fadeaways and step backs and throwing divergence and, you know, MACDs and all this other stuff on your chart. Like just learn the basics first.
And for those of y'all for back testing, like go on TAWS on demand. You can look up the on demand feature on TAWS, okay? Or if you're on TradingView, just look up how do I paper trade TradingView. You just use YouTube and figure out how to paper trade so you can start back testing. Because like he said, it's practice, practice, practice with technicals.
It is. It is.
You got to figure out what you can see. We should see the same thing, but sometimes on certain charts, you need to figure out, okay, this is what makes me comfortable. You know, this is the time frame for me, you know?
So because everybody has a different approach to technicals. So as long as you learn the basics, you develop your own approach. And then she just gave you 2 platforms, TradingView, Thinkorswim, and I'll throw in YouTube. If you use them 3 things, you can learn how to back test and you can learn how to delve deeper into what MJ already gave you on Supplemental Sundays, like 2 or 3 back. If you go to the playlist, you'll see MJ on there, technical analysis. Please watch that video again. Please watch that video again. All right. Keep your approach as simple and basic as possible. Can you explain it to a 10-year-old? That's very important because then you can learn how you're winning and how you're losing because your approach is so simple that you know what went wrong. You don't have to keep adding extra stuff or taking this off, or you're going to end up confusing yourself to figure out how exactly you went wrong if your approach is not simple. And then also, as we expand as Black people and lift each other up, we can explain the market to somebody who thinks it's a scam, who thinks it's gambling, who thinks, you know, it's white folks taking your money. You feel me? Because it's a lot of our people that think like that. But if your approach is so simple and basic, you could break it down to them and it makes sense. You just added another, you know, that's a blessing. You feel me? You planting seeds, and that's kind of what we here for. You know what I'm saying? Then they ain't gotta ask you for money no more. They could get their own. Look, now the market is master at forecasting events well ahead of time. By the time the actual news hits, the market already discounted it. We've talked about this on the come up before. You know, a lot of things are baked in. That's why the market doing what it's doing now. It's trying to figure out what the rates are going to be before Jerome even say it. When they going to do the hikes before Jerome even say it. They trying to bake that in now. You feel me? So by the time it come out, the market might get some love because it might not be as bad as they baked in. Or it might, you know, whatever. You feel me? So by the time you hear it, or by the time, you know, you think the market going to react to it, you already too late. Now, trading in a choppy market is one of the most difficult and frustrating things to do. Mind you, this man wrote this 10, 11 years ago. Still relevant. Still relevant.
It is okay to not trade.
It is. Tell them, AJ.
Yeah, it's okay to sit on your hands. Like some of y'all, I feel like have kind of gotten this addiction of looking in the market every day or feeling the need that you always have to like set an alert or something and, you know, go about and enjoy your day, do something else. Like some days aren't meant for you to be in the market, and that's okay.
That's a fact. I've taken 2 trades this year. One was a win, one was a loss. I'm not a choppy trader. I don't do that. I don't scout. I don't, you know, I might do a swing sometimes, but a chop a swing right up. You feel me? So I'm not, you know, sometimes you gotta sit down and chill. Sometimes you gotta do other things. You gotta, you know, spend more time with your kids.
Be disciplined.
No, be disciplined, you know? Simple. Be disciplined. Trust your gut. If something doesn't feel right, sell it, analyze it from the sidelines, emotion free. That goes back to what we was just talking about, you know, especially in the choppy market. If it don't feel right, you feel like, you know, by the time the market closes, you're going to be thinking about this position all day. You might not want to hold on to it. Earnings is coming up. You don't know if you should hold through earnings. Sell it. Yeah. Sell it and play the sideline and just see what happened. Worst come to worst, you kept the money that you had from that position. If it popped, oh well, there's going to be another pop that you're going to catch eventually. You learn something from this by sitting down and chilling, because if it slide, you know, you're going to be happy that you sold. So I always try to like remind people, if something pop after you sell it, that's not a bad thing. It happens. But that's what the market does. It's going to be another stock that you like that pops. And you're going to be there to get it next time because you learned something. Just let the market play out. Don't try to force yourself somewhere where you don't fit and you feel uncomfortable.
And usually when it pops, it's going to come back to that price anyway.
It's going to come back. AMD went back under 100 before it popped. So everybody that missed that AMD pop back in, what was that, November, December, when it ran all the way to 150, yep. It dropped back below $100. It came right all the way retraced. You could have got in and got that next pop. It happens. That's how the market goes. It don't go straight up. Let me see. Beware of trades that fail easily. The best trades barely give you a good price. That's a good one. I think that's more like swing, leapish. Leaps are kind of funny because some of their spreads are wide. Yeah. But the market makers are not ever looking to give you a deal. So, you know, just be mindful of that. Now, it takes a brave soul to admit a trade is not working and sell it at a loss. The easy thing to do is carry the position and hope it turns. Hope ain't going to do nothing for that position at all. It's people that have been hoping art get back to $140 for almost a year. It ain't did not a thing. Don't hope. Don't. If you feel like you got to hope something or you got to pray something, just sell it. I don't care if it's a chunky loss, because taking a 50% L is better than taking a 90% L. I'm telling you. And you could still do something with that money where, look, say you take a $5,000 position it go down to 2,500 and you got way less time. Would it be more beneficial to you to try to get back to that 5,000 in that probably leveraged position with less time, or take that 2,500 and try to find a safer position that you might could get 100% in and get your money back there rather than just having that losing position sit in your account? Sometimes you got to play it like that. There's positions all over the market that can get you money back. You do not have to stay in a losing position hoping that it'll come back. It's not going to work out for you. Never. Now, let me see. Your hardest work should be done while the market is closed so that when the market opens, you will be prepared once your setups become active. That's what Saturdays and Sundays is for. Sundays, you should be charting, planning your week out. You know, that's why we chose Sunday to do this type of show, is so that the market is closed. You ain't got to be on edge, watching, trying to learn at the same time. Your majority of your DD should be done when it's closed. You could chill, you could relax, come up with a good plan, and execute when the market is open. Surround yourself with positive people. Haters are hating for a reason. They are losing, pure and simple. Positive people are winning or on the right path to winning. This is a fact. This is a fact. You know, I've had to cut off a couple cousins because I'm like, yo, I don't need that negative energy in my inbox. I don't need no woulda, coulda, shoulda. Don't need none of that. And, you know, I understand it's hard to take losses in the market, but you're not going to get it back by crying about it. True. It's cool. You could have your moment. You know, everybody done lost money. It sucks sometimes. It's hard because you know what you could have did with that money, but you got to get over it. Not only for yourself, but the people around you. Because just like you don't want that toxic energy, you don't want that, you don't want to give that toxic energy to other people either. So stay positive, man. You alive, you know?
And don't trade money you can't afford to lose, for real, you know?
That's a fact. That's rule number one.
Here. Yeah, y'all be careful. Get people to help you out with y'all's 401ks and stuff like that, retirement money, because y'all out here risking money that y'all can't afford to lose. Right. And until you learn and start practicing for yourself, get somebody that can professionally help you.
That's a fact. That's rule number one. That's why I told y'all to put in the chat, how much are you willing to lose in one position? Because you have to stick to that. You cannot risk more than you're willing to lose, or you will blow your account eventually by compromising. Work hard and work smart. Both are equally important if you want to make a profession from your trades. That is a fact. The character of the person will be tested when things are going horribly bad. Will you be the phoenix to rise from the ashes? The game gonna test you.
Yeah.
The game is gonna test you. It's gonna see if you're supposed to be here or you're supposed to be, you know, buying shares and going to work. So if you want to be here, you got to make sure you're ready for what comes with it, because it's not sweet, or else everybody and their mama would be doing it. Don't brag, beat your chest when things are going well. Eventually, Mother Market humbles us. This is a fact. You know, when you get too feeling like you know it all, don't nobody know everything about the market. Warren Buffett done took losses. Hedge funds closed. Like some of the smartest people, the best market analyzers in the world, done took L's. What's dude's name? The Big Short. Burry. I don't know.
Yeah, Michael Burry. That's it.
Yeah, Michael Burry. He had Tesla puts.
Yeah.
He was wrong.
Tesla puts.
I know he took an L on that. He ain't telling nobody. I know he took an L on that. You know, and that's not to say like, oh, look at him, but I'm just saying it humbles the best of the best. So don't think you know different or know better. Now, the harder you force trades, the more likely to lose. Allow the natural process to happen naturally. Let the market come to you. Right. Don't put yourself nowhere where you don't belong. Let the market come to you. Be patient, be disciplined. Winning and losing streaks come in cycles. Be aware which cycle you are currently in.
Mm-hmm.
We talked about that.
Take a break. Facts.
We talked about that. You got to take smaller trades, take smaller trades. If you got to start cutting profit at 20%, cut profit at 20%. I don't care if you bought it that same day. If you in a losing cycle, your next trade, you up 20% by market close it out. Take that win, go home, you know, and regroup. Sometimes you got to do that just for your confidence. I'm not even talking about for the money aspect. It's for your confidence so you can get that back, so you could stay in the market and become profitable. Don't be a bull, don't be a bear, be a predator, constantly lurking and stalking the easy prey. Wolves of Wall Street. You feel me? That's why they use that term. You're not a bull, you're not a bear, you there to get money. Period. You there to get legal money. This is a game where you can legally get money from people that you do not know. Somebody is on the other side of that trade losing. That's how you got that bread. It's part of the game. You got to be a predator. You got to be a wolf to be successful in this, at least. Perma bulls and perma bears, I should say, are dangerous, lazy, and arrogant. Don't take their views too seriously if you care about your account. Telling y'all, be careful on that Twitter, man. Then people be leading you astray. I seen it for myself. I had to unfollow. I had to do a whole unfollow session because I could see how these people try to put stuff like, let them tell it. After Facebook missed them earnings, the market was going to hell. Amazon was going to miss. Snap was going to miss. The market was going back to 420. And look what happened. None of that happened. So you got to be careful with them people. Like they said, it's a lazy opinion. They're not weighing both sides because you shouldn't be perma nothing. The market goes both ways. Catching falling knives will sooner or later land you into a minefield. Big difference between buying a dip and catching a falling knife. That is a fact. You have to pay attention to when the downtrend is super, super strong. You do not want to be the one at the party catching a falling knife. If you was waiting for Square to come down to $200 and it went straight down to $200, no bounce, no demand, no sympathy buying, do not buy it on them red candles. You need to wait to see a bounce. Square ain't bounced yet. If you look at the weekly candles, there is not a bounce in about a good 3 months, 2 months. You feel me? So you don't want to be catching falling knives thinking that, oh, I'm buying the dip, especially in the options game, because that dip gonna keep dipping and it's gonna get real nasty. All right, boom. So we're gonna get through the rest of this kind of quickly. Professional traders know strengths begets more strengths, weakness begets more weakness. So buy the strength, buy the bounce, do not buy the dip just cause. Most traders are never happy with their trades. Understand that no trade will ever be perfect. It's just like business. Good business deals, both sides don't leave happy. It's a business deal. So you getting into a position with certain expectations, you're not gonna get the bottom, you're not gonna sell at the top every time. It don't work like that. When a stock breaks out on big volume, the first dip will normally be bought up very quickly. That's just a trend thing. If you have no solid plan, then why are you in the trade? So you need to have your setup, proper entry, stop loss, exit strategy, target. Once you get in a position, you shouldn't have no questions for an outside party about it. You shouldn't, because if you in a position and you have questions after the fact, you were not properly prepared to put your money into that position. I should not be responsible for your money after the fact. If you want some help preparing, your setup or your entry or your stop loss before you get in, that's different. You trying to get a proper plan, get some other point of views, maybe, I get that. But if you're already in the trade, you shouldn't have no questions about what to do next. If this happens, if that happens, if the market goes this way, you got to have that already planned out. That's your bread. I'm not responsible for your bread. AJ's not responsible for your bread. Mark definitely ain't responsible for your bread, because I guarantee you that option go to zero. Mark's still gonna be eating that wild salmon that he made in that video. You feel me?
Yo, that jerk salmon was so good though. Like,
You
it was
feel
so
me? Like, he's still gonna be having that for dinner. He's still gonna be pushing the Tesla in Seattle.
thanks.
So there's nothing that he can do that's gonna, save that position. So just get that prepared. You feel me? Oftentimes the best trades require you to buy high and sell higher. This is true. At that point, you playing the trend. Now you have to be careful with that, because you want to make sure you're not buying the top. So this might be something that was at all-time highs, fell dumb low, bounced, and you're not buying that bottom. You're buying a little bit higher so you could sell as it continues to recover. That's not a bad strategy. You playing the trend. Like I said, just be careful. Don't buy the top. Don't buy an all-time high just because you gotta be wise about it.
Or like some people say, buy the retrace.
Buy the retrace. Go back. I'm telling you, go back to that MJ video. Everything that we're being vague about was spoke on in detail in that video. Learn to be patient once in a winning position. Learn to be very impatient when in a losing or questionable position. That's a fact. It's better to cut early. Sometimes things that you cut early is going to recover. It happens. There's no way that you can be right on every single trade. You are trying to protect yourself. So if you cut a trade at 10% 5 times, and out of one of those, or out of 2 of those 5 times, the trade took off and you missed it, but the other 3 times it went lower, you made wise decisions out of those 5 times. Because if you would have stayed in all 5 of those trades, I guarantee you probably would have walked away with less money from those 3 losers, because you would have held them too long. So it's always better to cut early and stay in the game with the capital that you already had in your mind that you was going to walk away from that trade anyway. Because if you say I'm not willing to lose more than $1,000 and they get to negative 996, it's time to go. You still kept the rest of your capital. You could still make other moves to get that back, and depending on how much you risk, say you risk 5,000, you only need 20% to get that back. It's nothing. You feel me? So just be wise about that. Be patient in a winning position. Be very impatient in a losing or questionable position. Lowering a stop loss is the first sign of trouble. You are breaking the rules and emotions are starting to creep in. Careful when you see that. Don't lower your stop loss. If you went into the trade with the plan, my stop loss is going to be this dollar amount, or my stop loss is going to be negative 20%, 25%. If you see it like creeping, or it's like it's on that support line right at like negative 23%, don't start changing your stop loss to negative 35 or go in there and changing it on Thinkorswim. Set it hard, because you trying to teach yourself to be disciplined. So even if it goes wrong, at least you was wrong in your discipline. You wasn't wrong in trying to waver. And anytime you start doing that, you tricking your mind, and you're going to end up losing that way, because you're going to do it until you take a big loss. I'm telling you, it's nasty. Your mind is a very sensitive program. And the more that you play with it, the more you going to trick off, the process that you're trying to build. You feel me? Do that make sense, AJ?
Yeah, definitely, bro.
Okay. Now, never ever get into a position that's too big for the account size. All it takes is a bad trade to cripple you beyond repair. Now, we should all know this. Proper allocation.
Yeah.
Do not put majority of your account in one trade, especially in an options trade. You need to have, whether it be 10%, whether it be 5%, if you have a big enough account, 1%, you need to have a specific allocation that you're not willing to put more than that into one trade. Or else, if you do happen to take a big L, if we have some terrible news come out, or, you know, like a Peloton situation. This Peloton was a good company, but if you had a leap in that, you woke up one day and your leap was negative 95%, and you might have been up 50% just based off of that happened. Or even Activision, something like that, where you got to be mindful of some of these companies that can't get acquired. If a deal comes out with a share price that's lower than your strike price, your option is instantly worthless unless the deal don't go through. So if you too far out the money, you may think, oh, I got a good position, but anything can happen in the market. So you always want to be prepared for that. I know y'all shooting for the stars, you know, I've shot for the stars. It never ended well. I ain't never shot for the stars, and it was like, yeah, I'm glad I did that. It never ended well. You feel me? I was shaky. I had to get out. You feel me? It's okay to say I'm wrong, and what do I need to do now? So yeah, always be humble. Always be aware of which stocks are exhibiting strength in the weak tape. Always be aware of which stocks are exhibiting weakness in a strong tape. So when we in a weak market, when we in a red market, look to see what's up. When we up, look to see what's down. You always want to pay attention to correlations, inverses, weaknesses, because you might find some gems there. That's how I found XLE last year. That was my most profitable ticker that a lot of people wasn't talking about, but it never recovered from 2020. Every other sector recovered mainly from 2020, that dip, and XLE was still like 50% off. So I was playing it and it worked out for me. It's still working out for some people. I ain't played it this year though. Boredom trades, costs add up and can hurt you. Be aware of when you are simply bored and looking to trade something just to trade. Now, I can't speak to this because I never understood this. I don't got bored money. I know some people is more well off than me, you feel me, or might not have no kids, or, you know, whatever. I'm not that type of dude, but boredom trades do add up. If say you got like a $50,000 account, right? And say you got your leap set up, you got your stock set up, and you just want to play some earnings, or you just want to play a weekly sometimes, you feel me? If you risk, say, $500 a week, and you're losing on a lot of those trades, you're just giving money to the market. You feel me? You might not even give some of your family members that $500, but you willing to risk it and be bored with it in the market. And if you lose it, it's whatever. But I guarantee you, if you look at your tape at the end of the year and you add up them boredom trades or them whatever trades, that might be about $5,000-$6,000 worth of bread. And I don't care how much money you got. That's a lot of money.
Thanks.
It's a lot of money.
In other words, you need to be disciplined, and you basically need to have a plan that, hey, I'm only going to trade this day, these times, and that's that. Every other trade that I might want to take needs to be a paper trade.
That is a fact. Yeah. Do the boredom trades on paper trades. That's facts. Great point, AJ. Now, you will never buy the exact bottom. You will never sell the exact top. Don't beat yourself up if you left money on the table. That's like one of the things I live by. I try my best not to ever beat myself up if I sold a trade too early, especially if I was profitable, because I'm not mad at that. I made money. I made that decision to take that money at that time. So clearly it was cool for me. You know, it happens. You're never going to hit every single one to a T. It don't work like that. Emotions is what causes most traders to break their rules. It's not the news that is important. It's the reaction to the news. Respect the price action. So we've seen that many a times where we see an acquisition talk be in play and the company slides, or we see good earnings come out and the company slides. Like it's not the news itself. It's always about how the market reacts to it. So don't, get in your feelings because the market didn't react how you thought it would react. You got to respect it and play what it's giving you.
In other words, your money ain't going to do nothing to the market, basically.
Yeah.
Your money does nothing, does not move the market.
It don't at all. I promise you it don't. All right, so use your gut. If it doesn't feel right, remove it. Reassess from the sidelines, motion free. We talked about that. Have a list of setups ready for the following day. Know the trigger prices ahead of time. Have plans, setup, position size, entry, exit, mass loss, and target. That's more for short term. I would say if you are preparing to get into a trade or a leap, you definitely want to have this ready. So if you see something is lingering around a support that you like or hit a target price that you like and you didn't get into it that day, set yourself up overnight. Set up some triggers, set up some alerts, have a plan, know how much you're going to spend, know how much you might average down if it get to here or get out if it get to here. Have all that ready. No plan, no trade. 10 out of 10 times, or 10 times out of 10, traders who carry big losses wish they had respected their original stop. So respect the original stop loss always. Do not listen to nobody telling you that you should stay in the trade. Never, never, because if that trade goes bad, you are going to spend so much time, energy, and emotion wishing that you had got out of that trade. Don't wish, man. Don't even set yourself up to have them kind of wishes. Just get out the trade. Get out the trade, live the trade another day. You took a fat L, it happens. At least you got enough to bounce back with. If you take away 70% of the amount that you originally put in from a trade, you can get that other 30% back. If you take away 30% from a trade, it's going to be very difficult to get that 70% back, and it's going to stress you out in the process because now you got to get over 100% to make back what you started with. Don't set yourself up for that. Over trading is the poison for your trading. Less is more. Never chase gap ups. Allow the first 45 to 60 minutes to pass by and then see what is setting up best intraday. I mean, that's kind of like self-explanatory. Focus on finding good bases. The longer a stock bases, the more meaningful the breakout. That is a fact. We've seen that play out many a times. We still waiting for Amazon, but you know, the longer a stock basis, the more meaningful the breakout. So when Amazon does turn up,
boy, it's gonna break out. Okay, it is going to break out. You gave me a whole year consolidation. I need you to break out for a year.
Man, what? A whole year. Break out for the do an NVIDIA breakout. You feel me?
Turn XOY up. You hear me?
All right. And then lastly, keep a balanced life. It's not all about the screens.
Yes.
Spend time with family, friends. They deserve more attention. So this is something that's very, very key. I know the stock market is interesting. I know it's always a feeling like, ooh, I could be getting money. Ooh, I could be missing money. But man, listen, you only got one chance with your kids, with your spouse, with your parents, with some of your cousins, with some of your friends, your homies. Make sure that you are not so engulfed in the market that you are neglecting your outside life, because none of that money that you getting in the market can replace the lives that are around you, unless you got a bad life. There's some people that got a bad life. You feel me? I'm not going to ignore that. Some people, all they got is the market. I'm not talking to you right now. I'm talking to the people that got love around them, or especially if you got kids. Make sure you keep that balance, man, because that's going to help your mental as well, to where you're not stressing yourself out trying to stretch every dollar in the market. You still living your life. Y'all see Q. Q might be one of the most knowledgeable people in the market, you know, that's part of our community. That man lives his life. He don't talk about the market all the time. He's not focused on the screen all the time. Granted, you know, he has a stock market job, but he's able to have that balance. I had to that I had to take some of that from him. Like, I don't have to post everything on my social media about the market. You feel me? Like, I'm a real man. I'm a Black man in America. It's a whole bunch of more stuff going on than options. You feel me? So
I
we gonna
seen your
go
bench
ahead.
press the other day too. So speaking of balance, y'all, and make sure
You
y'all get
seen
y'all.
that? Listen, man. Listen, hold on. Let me take it off shit.
Boy, okay, listen, we're not about to do this in front of company. We're not doing this tonight in front of company.
No, that's a fact. Now,
but seriously though, like having just healthy balance, right? You know what I'm saying? Like, God, meditation, whatever you got to do, right? Just having a pre-market routine, whatever they may be for you, right? Just balance throughout life is just necessary. It's necessary.
And have days that you take off, whether it be Tuesday, Wednesday, Thursday, end of the month, whatever. Have days that you take off. You don't look at nothing in the market, just to give yourself that time. Now that did take an hour. It took longer than I thought. So we're not going to do the option chain breakdown today. If you really want it, we do have a video of that in Facebook. Eventually, I will do it on here just to have it on YouTube. But we've already used this much time, and I could save that for another time when somebody postpones or cancels. So I'm going to change the title. We'll come back to that. AJ, I'll let you do your thing for the week.
All right, so let's do the week ahead. Okay, so it's a whole lot going on this week. So for earnings, let's talk about earnings first. On Tuesday, we got Pfizer, Peloton, interesting. You got Enphase, Chipotle, all right, those of y'all who love CMG, XPO Logistics, shout out Q, put us on the logistics game. On Wednesday, we got CVS, Disney for all the Disney lovers. Okay, we have Uber this week, Twilio, Zynga for those into the gaming. Thursday, we got Affirm, Datadog, Twitter, Cloudflare, Zillow, and Coca-Cola. All right. So those wrap up earnings for this week. So conferences. For y'all who are ARK lovers, we love ARK, right? Tuesday, we got the ARK Invest February webinar. All right. So we know ARK always comes on, talks about the market development for the month, overall macroeconomic outlook, as well as, them investing in disruptive innovation, et cetera. AMD lovers on Wednesday, okay, it is the HSR regulatory review period deadline, all right? So we need to be looking for a settlement this week, okay? So we might see some news around AMD this week, so be paying attention to its price action. On Thursday, we have the Uber Investor Day. This is the first one since going public, all right? Also keep in mind, Lyft reports before Uber this week. So just, if you want some insight into how Uber may do, you can pay attention to Lyft. Economics for Thursday is the day to pay attention to. It is on and popping. We have the Fed budget balance, the unemployment claims, the 30-year bond auction. Okay. We have the OPEC monthly oil market report and the consumer price index. So with the consumer price index, y'all, that's the inflation. So we got the employment numbers last week, right? So now we get the inflation to kind of give us an idea of what the Fed might say in terms of rate hikes going to FMOC, okay? So just some things to pay attention to for the week ahead. That's it, bro.
Appreciate that. So yeah, definitely pay attention to them CPI numbers. Those are typically market movers. We have covered, what that is in the past with what was that, Quill and Norval.
Correct.
So if you want some real quick economic spiel before we get to the CPI numbers, go ahead and run that back.
Dave too. Dave did one on economics too.
Yeah, he did. So yeah, check out both of those. They're about an hour long, so you got enough time to check them out before the numbers come out, and kind of get some insight of, what they mean if you want to watch it afterwards. But no, I appreciate y'all tapping in, man. I know it wasn't as formal, but hopefully y'all took something from it. A lot of those things are just key points. Like I said, those come from somebody who's been trading a very long time. And when I read it, I took a lot from it because I read that way back. I had to go dig that up. You feel me? And If you're looking for a book that kind of goes even more in depth than that, look up Trading in the Zone. Trading in the Zone is a good book for mentality. It's a good book for discipline. It's a good book for developing a mental process to be a successful trader. So that's like the one market book that I could vouch for, because I'm all about mentality. I'm about that in life, period, but definitely in trading. If you ask me what's the most important thing when it comes to the stock market, it's this right here. Fundamentals, technicals, and all that is cool, but if you don't have no patience, you don't have no discipline, you don't have no, you don't have your mindset right, you're gonna fail. I don't care how much you know, because those are the things that the market is going to test and reveal to you how much of those attributes you actually have. You feel me? So make sure y'all taking care of that, man, because I wouldn't give y'all this if I knew that y'all had it all the way together. I'm keeping it 100 with y'all. It's a lot of people that is too focused on technicals and need to get this mind right. I listen to y'all speak. I'm with the people. Y'all be calling me a mentor, but be rubbing elbows with me at the lunch table. You feel me? The mentors is over there, taking pictures with Range Rovers and got rollies on. I ain't got no rollie on. I drive a 2013 Impala. You feel me? So don't
vouch for that.
You feel me? Like AJ seen it.
I can vouch for that.
With a cracked bumper on it. Like I'm with y'all. So I hear y'all and I'm presenting this information because I know a lot of people need it. Get the mentals right, man. But we gonna get up out of here. I'm not gonna hold y'all too long. I appreciate you, AJ, always ready.
Appreciate you, bro, always.
Whatever, you know what I'm saying? So we not having it next week. Make sure y'all tune in to the greatest show on turf. You feel me? If you want to root for the Rams, I would not be mad at you. We need all the love we could get. I'm still trying to find my way into SoFi next week. I'm speaking it into existence. You feel me? I might just pop up in LA and just, find somebody slipping. And I'm not talking about robbing. I'm talking about somebody who trying to get their tickets off. They can't make it. They just trying to get some bread. Yeah. I might have like 500 for you.
I ain't mad at you, bro.
I know the tickets is going for 5,000. I might have 500 for you, bro. And you could walk away, go get you some steak, whatever, change your plans. But we're not gonna have supplemental Sundays, but the week after, we're gonna be right back to normal. We got some people lined up, so make sure y'all keep tapping in with us. We love y'all, man. Have a good night.
Peace and blessings.
Boom, and stream.